Okay. Hi, everybody. Welcome to Selling the Dream. I'm so excited to see everyone coming in. Well, we have a lot of people joining us, probably from all over the world. My name is Kara. I'm head of marketing for Hustle Fund. We're an early stage investment fund. We believe founders can look like anyone and come from. I am tickled to be hosting today's event alongside Mark and Alex from Deck Doctors and Haley, who's joining us from the investment team at Hustle Fund as well. We're kind of scattered around the world here. I'm in California, Haley's in Virginia, Mark and Alex are in New York. We would love to know where you are, just where in the world. We often have a global audience. And so if you wouldn't mind sharing with us where you are dialing in from. Oh my goodness, already got Jerusalem, New York, Toronto, Texas, Philippines, Singapore. Holy smokes, we are spread out. Well, thank you all so much for taking the time to join us, especially if this is not an ideal time slot in your day. We are recording this and we will share this out later, but I find it's always best to join live so you get your questions answered. We're going to dive into the good stuff in just a minute or two here. But before we do, I would love for you all to meet the people behind this event. You've heard from me plenty already. Mark and Alex, do you want to tell us a little bit about who you are and what Deck Doctors is?
Sure, sounds good. Thanks, Kira. Super pumped to be here today with you all. I'll give you a little bit of backstory on us, and then we can talk about why we're here. The long story short is Deck Doctors started with a lie and then a cold DM. So we basically, the real inception was I was working at an accelerator program supporting early stage founders and noticed that a lot of their pitch decks sucked. And part of my job was sending those pitch decks along to investors. And it made me look bad. So I gave my buddy Mark a call. And the backstory between Mark and myself are, we actually went to high school together and started our first business together when we were 15 years old. It was a t-shirt company. We probably sold about 25 shirts in the halls of our Manhattan high school, and then parlayed that experience into a barrage of internships and other kind of startup related endeavors, none of which amounted to too much, but gave us kind of that 10,000 hours of pitching each other on ideas throughout the next kind of several years. Pitching those ideas to ourselves, pitching those ideas to friends and family, and kind of getting that experience of storytelling, crafting business models, and the like. So when I was working at the accelerator, Mark at the time, was following his passion and working for the USTA after a long stint at a company called RGA, which is an innovation and brand consulting firm that did amazing pitch decks for the likes of Spotify and Google. So we kind of looked at the market to see if we could bring a provider in the space to help our founders make better pitch decks. Noticed that most people were design focused, but planted the seed that we potentially could, with our experience pitching and storytelling throughout the years, could support founders in that way. Fast forward a little bit, Mark gave me a call one day and said he was talking to a friend of his who was starting a company and needed help with a pitch deck, and lied and said that we had a business supporting founders making pitch decks. And at first I was like, we're totally unprepared. What are we going to do? We take the call, and I wish I could say the rest is history, but the call went pretty terribly. We didn't get the business. We were completely a mess. But we left the call thinking, what, this is a pretty great idea. Let's formalize it. So we spent that night kind of putting a little landing page together on Card for $20, came up with the name Deck Doctors, and started cold DMing, the concept out to people on Twitter. One of the very first people that responded to that cold DM was Brian Nichols, founder of Angel Squad and venture partner at Hustle Fund. And then the rest was history. With the support of Hustle Fund from the start, we've grown our business, grown our team, worked with a ton of different founders, worked with amazing partners, and recently just crossed our 100 client milestone. So we've worked with a lot of people on a lot of stories. Gained experience, and have just had the best time with it. So that's the long story of how we got here and who we are. We love storytelling, we love positioning, we love design, and we we, love helping founders craft really compelling pitches. So anything else there, Mark?
No, I think that covers it pretty well. Yeah, man, it was a fun day when I called you and said that I lied. That was a fun that was a real moment, but I'm happy it happened. Cool. So I want to quickly talk about the topic of today, and then let's dive into some of our guests. So we are hosting this webinar to mostly focus on setting up a pitch deck. We believe this is a really important thing because people have different differentiators. Sometimes your business will have an amazing team. Sometimes you have an amazing technology. Maybe you have an amazing distribution plan, but every business is solving a problem. This is a common truth that really shows up in every single deck we work on. And it also shows up as an issue in basically every deck we work on. This is often the first thing that someone sees when they read the deck. It's your moment to provide a lot of storytelling to hook a potential investor, get them excited about the business. And if you don't hit the mark perfectly here, you don't really have a shot for the rest of the deck, no matter how many great ideas and things there are to say in it. So we want to focus today on setting up your story for success. How do you outline a problem and an opportunity that surrounds that problem? So when you are ready to talk about yourself, someone's on the edge of their seat and excited to see how you're approaching things. So hopefully that covers it all. I'll pass it off to Haley to give a quick background on herself and chime in with anything, and then we'll dive into some of the presentations.
Thanks so much, Mark, and welcome everyone. I'm Haley. I'm a principal at Hustle Fund, investing across B2B SaaS, digital consumer health, fintech, and Web3 across the US, Canada, Southeast Asia, Africa, Latin America. Been here for about a year. I was an operator for over 10 years prior, most recently running a B2B SaaS content marketing agency where I saw firsthand how hard storytelling is. So much respect for Mark and Alex. They help so many of our portfolio companies. I personally don't know what I'd do without them. Excited to be here and to learn, as well as ask some questions to the folks that have joined.
Thank you all so much for that backstory. I think we can dive into the meat of this. So let's go ahead and bring up our first founder, Farhan, the founder of Sorry Music. Welcome, Farhan.
Thank you so much for having me, and all of you for joining. Should I just bring up the pitch deck and get into it?
Yeah, let's dive right in.
All right, brilliant. So just housekeeping, you can see the deck.
That looks beautiful.
Amazing, thank you. So my name is Farhan. I'm the founder and CEO at Sorry. I grew up listening to South Asian classical music in a family that has been patrons of it for now 64 years. So a few years ago, I couldn't find good quality content online, and I was very surprised. And it turns out there are 125 million people around the world are like me out of 1.6 billion South Asians who love this genre of music, but do not have easy access to it. It's a £9 billion market that is rapidly growing, as is the music industry, that is going to be doubling its revenues by 2030, according to Goldman Sachs. And emerging platforms like what we are building is going to be driving that growth. So at Sorry, we are building the digital ecosystem for South Asian classical music, where we provide easy access to exclusive content, all in one place, and designed for the nuances of the culture. We already have an audio streaming service that is live worldwide on iOS, Android, and on the web. And we are going to be building an appreciation payments feature that is going to be coming soon as the next part of this ecosystem. Now, we have secured exclusive worldwide rights to 85 to 90% of all recordings for the genre that are coming from Pakistan. In the last year, in a small pre-seed round, we grew 70x to now over 500,000 unique monthly active users, with a very strong retention of 35% in our WOW MAU. So as UT Austin, the University of Nevada are already institutional subscribers, Harvard, Oxford, Columbia, and others are now in the pipeline. We have a best-in-class cost per install and a best-in-class sign-up conversion. We have early revenues with very strong churn of less than 3.6%, with the industry average being at 10%. This translates into a best-in-class cohort retention, much better than the early years of Amazon Prime, Netflix, and Spotify. We have a simple subscription business model for the audio streaming service, which kicks in after the initial sign-up bonus has been consumed. We're different not only because of our content, but also we are specialists in the genre. Our most closest competitors, who are also specialists, have non-exclusive content. And then as we move into the generalists, Spotify is actually a complement to what we're building. They have a gross margin of 30%. We have a gross margin of 82%. I am very lucky to be with some incredible co-founders. I have 17 years of experience in this industry. I'm global MBA with honors from Columbia Business School, London Business School, and Hong Kong University. I did my bachelor's in computer sciences, and I continue my family's 64-year legacy in this space. I'm the first non-artist Pakistani to make it to the Recording Academy / the Grammys. Both of my amazing co-founders come from London Business School. Devin is a serial entrepreneur, and Nick was the subscription manager at Spotify. We have an expanding global tech team, outstanding investors on the cap table. We've been winning awards across the world, from New York to the UK. And in the future, we're going to be building out each part of this ecosystem, which is very difficult to find, surprisingly, in the digital world. Now we have a complete plan of how we'll be building it out, and we'll be capturing in 5 years about 200 million pounds in revenues, which happens to be about 2% of the market. We will be raising 5 million pounds in our next raise, and we'll be investing that into marketing, content, and operations into tech to get us to 23 million users and 9.5 million pounds in annual recurring revenue. So thank you very much for listening. I know that was really quick. We only had 3 minutes. I think I went a little over that, but thank you for your patience in listening. I would love your feedback and very happy to answer questions.
Awesome. Thank you so much for sharing that. I will raise my hand and say that, I kind of raised my hand when I saw this deck and wanted to bring it on live and to meet you. I think I've never met someone who's building in this space, and I think I was blown away by the user love that exists for this. It's clear that this product is changing people's lives. The growth speaks for itself. And as the deck went on and we got into your background and the team, I just got really excited that you were building something special. So I think we can improve the first couple slides, and that's really what we're here to do today. So the first thing I want to discuss is this slide 2. You could pull it back up, or we can just kind of talk about it quickly.
Absolutely, pull it back up.
Yeah. So great. So I think there's a lot this does pretty well, actually. You're setting context. That's really something that's great to do at the start of the deck. You're using numbers, which adds credibility. It lets someone really sink their teeth in. And I think the main question and push I have here is why. So this seems like a kind of alarming number. I know in America, I live across from a classical music venue. They're struggling to get people in the doors. It's not necessarily the hottest topic here. So I'd love to understand, what is it about this geography or this type of music, specifically in South Asia, that leads to such enduring love for this genre?
Well, thank you for asking. Lots of questions in there. I hope I can answer all of them. And thank you for that incredible feedback. So the genre itself is hundreds, if not thousands of years old. And it's kind of grown out of the soil, as we say, in local terms. So very much grassroots, very much embedded in our history and culture. And so even South Asian classical music over the past few years was actually seeing a decline and having challenges in bringing in people through the door. And we were expecting actually people to skew older when we launched this, but 53% of users are actually 18 to 35-year-olds. And it turns out, not only with the older generation, but also with the younger generation, there was never about the music itself, but it was about access to the music. And now that we're providing that access to good quality music, they're actually listening and kind of really engaging with this in a way that we had never really anticipated. Does that answer your questions?
That answers the question super well. I think one way we could push this is if we kind of keep this header and then have something underneath that says thousands of years of history embedded in culture, passed on to new generations. A couple of quick boxes or bullets to kind of speak to those cultural trends, I think would answer that next question and fully fill in the picture. But no, I think that's super clear. And overall, this is a perfect way to kick off. So let's go to the next slide. I think this is the one where I want to spend the most time with you. So, I think for the most part, growth trends are almost table stakes. Very few people are building something in an industry that's moving backwards and doesn't have some things going for it. I know that global music revenues will probably increase by 2030. So what I would love to discuss with you and ideally do here is really highlight why there's this gap that persists. The first thing you said on this call is that you, as a lover of this music, didn't have access to it. And I think what a really good opportunity slide will do is actually show why the problem set up on the slide before isn't being solved. So you mentioned a few competitors on slide 12. That's always a place to start. But I think I'd love to hear from you. What is it about this type of music that has led to it not being easily accessible to many?
So several reasons for that. One is the public space has been dominated by corporates who've been investing in the music. And so therefore they are looking for this very catchy, 15 second, 30-second jingle to kind of get people's attention. And that's what kind of Western genres have also focused on, kind of getting, the average track length for Western tracks is between 3 to 5 minutes. And so when you come into South Asian classical music, it's something that you sit back and relax and grab a glass of wine, and really relax most of the times listening to the music. And so it's a very different mindset, and you don't necessarily see it in the public space. And so when kind of where all the investment has gone in the past has been on Western genres, and therefore the generalists have designed the experience around that. And that this is something that Apple Classical is also kind of now addressing. And Apple recognized this a few years ago, acquired Primephonic, which was a Western classical music streaming service. And then on the back of that has launched Apple Classical because they recognize the experience for nuanced genres cannot be captured adequately by the Western by the generalist experience. And so we're essentially doing the same thing, but for South Asian classical music. And so, which is why in the past, it kind of hasn't gotten mainstream attention, I guess.
Yeah, so I think a really strong approach you could potentially take here, and it would maybe save you from even having to have the 2x2 towards the back. One of the problems that we encounter with 2x2s is we've never seen someone who's not in the top right, which is, no one doesn't set themselves up for success with that framework. What I think you could really do here is make a point that because of the nature of this music, it's been overlooked by the traditional digital providers. So versus highlighting how big this market is, I think actually just drilling into it, and you can show essentially on one side that until recently, Apple Music and Spotify didn't even have this music. And then on the other side, that maybe there are some niche entrants, but they're not focused on South Asian classical. Maybe they're focused on, other maybe long form genres from other countries. So I think that would be my general push here. But when you explain it, it makes a ton of sense. And yeah, just wanted to reiterate kind of my excitement and gratitude for you sharing this with us. I'll pause there. Would love to get Haley's investor lens on this. And Alex, feel free to chime in too with anything I missed.
Thanks so much, Mark. And Farhan, thank you for sharing what you're building with us. It just got better as it went. There was so much to like about what you're building and the opportunity here. I was super impressed by later slides around customer acquisition costs, which are usually just kind of scary in consumer retention, and then the distribution angle, all of which I was curious about how we could bring kind of further up in the deck to really grab attention. Agree with Mark's point around just the question, like, why don't people have easy access to the music? My first question was around the end user experience. Is it a matter of how they're searching for it? As you went deeper into why it's a problem, I think I understand better. But the big question I'd have as an investor for this is not only why is this a problem, but why is this a problem that either people would be willing to pay for, or barring that, how monetization might work. So I'm curious, maybe asking a question from further down in your deck, how many of your users or what percentage is from those institutional contracts versus direct acquisitions?
Oh, thank you for those great questions. So on the end user experience, let me give you an example. So a rag is kind of the base for South Asian classical music, and a rag is crudely translated into a composition. And these, over hundreds of thousands of years, have been established for different times of the day, or different seasons. So for example, right now it's 6 p.m. in London, we'd be listening to Rag Aman. In the afternoon, we'd be listening to a different rag. In the morning, we'd be listening to something else. When it's raining, you'd listen to Rag Megh and Malhar. And so this has been established, but people have never really had the chance to kind of dive into it easily. And so we have changed that. When you log in onto the app, you will see recommendations for rags for now, based on those hundreds and hundreds of years of kind of research done by gurus. And so that's one of the ways that end user experience is different. On the monetization side, because this music people have not had easy access to, they're actually now very willing to pay for it. We're still figuring that out. So up till now, we were just focused on getting more users on board, getting analytics in place, and being able to understand them much better. And now we've started to kind of move into kind of monetization. We always had a placeholder for different subscriptions in place. So people could do a daily, monthly, half yearly, and yearly plan. We had placeholder pricing in place. We've recently changed that into a pay what you want model. So you can go there. We do make recommendations of what price you can pay for it, but that you can still go lower or higher. We've seen people are going 13 to 15% higher than what we had originally anticipated that they would be paying. And so we're very excited about that. On the split between the universities and consumers, about 50% of our revenues, 50 to 60% at the moment, are coming from universities. That's a different use case, but our tech is exactly the same. But we do anticipate in the future that consumers will be taking up the bulk of it, because it's a much bigger market as compared to the universities.
Great.
Does that answer your questions?
Yes, thank you.
Thank you for the questions.
I think we'll potentially have some time towards the end to circle back to some of these. At least that is my hope. But for now, I will pass to Alex and Henry to get into our next guest.
Ron, thank you so much for being here, and definitely take a look at the chat. People have some questions for you.
Thank you so much for having me.
Nice. Thanks for kicking it over to me, Mark. I'll go ahead and share my screen and jump in. And also just, thanks for the Hustle Fund for putting this in. It's been awesome to see how, your team supports entrepreneurs. So thanks for hosting this, and excited to share about our deck. So my name is Henry Woodbridge. I'm the CEO and founder of Undecided College Planning. And we are a new college planning tool for high school students and families. I think we can all really closely relate to the problem of how stressful making the college decision can be. There's always so much pressure on it, whether that's socially or from your parents. It's a really stressful decision to make. And the amount of support for students and for families, especially low and middle income families, the amount of support is really, really low. So the average public high school student has about 15 minutes to talk with their school counselor about college planning, which seems like almost no time for how much you need to actually think through the college decision. It's a really pervasive problem. So 75% of high school students said that they were moderately or not at all prepared to make these types of decisions. And there are some serious market and social failures. I'll mention one briefly now, that a lot of marketplaces charge $200 an hour at a very minimum for students or families to work with a private college advisor. And if we extrapolate on what some of those market failures really are, it'll kind of highlight the competitive advantages that we have But a lot of the competitors that we see that aren't really able to deliver this service to all of these populations is because their legacy softwares that were built on a school district model fit, which means that they were selling to superintendents or principals at high schools, and they built their products around those decision makers. So they built to try to sell to not the end user, and that really jeopardized the end user experience. I mentioned marketplaces and private advisors charge $200 an hour, sometimes charging $3,000 to $10,000 for a package, which is, really only available to affluent families. A lot of these companies are also really reliant on a B2B model where they sell student data to colleges and universities to let those colleges then market to students and recruit them, which is actually where my previous experience was before launching this company. And there are a few innovation and platform advantages we have as well. So we know that Gen Z highly prefers to use their phones to complete any digital task. And if we step back and look at the whole market, even with all of these limitations, there's about $3 billion spent on private education consulting in the US every year. So it's a massive market. And the solution that we've come up to really fit this need is a few different things. We've built a really robust mobile platform to conduct college advising for students and families, and we've included an AI advisor in there as well. So I'll highlight some of the insights that we've learned about our users so far, and that's that high schoolers have a 20x preference to chat with our AI advisor, nicknamed Desi, than with a real college consultant, which is what a lot of our competitors are doing. We've also learned through some beta tests on our subscription model that parents are 3 times as likely to pay for Undecided Pro than a high school student. So our tests that we did resulted in parents converting at a 21% compared to students converting at a 6% rate, which makes sense as parents have so much more capital and a higher willingness to pay. And we've also designed our app to include a lot of our go-to-market strategy in referral systems in the app. So we have a freemium model where students can create their college list and share their college list with their friends for free. And they can share in-app content as they learn about college admissions with their friends. And also it's just referrals between parents and students. So students can invite their parents to pay for the subscription, as well as when a parent subscribes, they can then invite their child to pay for the subscription. And so just for this exercise, this is, I only created these 3 slides. I'm happy to share more about our traction or our further details on the go-to-market plan, our raise amount. We're raising a $300K safe on a $2 million post-money valuation and have had a few investors commit so far. So happy to share more, and thanks so much for taking the time to learn about Undecided.
Awesome. Thank you, Henry. This is it's really strong setup. I think we really we're excited about this one because it's the kind of product that most of the audience will have some buy-in on, whether they went through the process themselves or know somebody who's gone through the college process. It's something that people can relate to, and I think that always makes for a good exercise thinking through how to storytell to people that really understand the problem right off the jump. So really appreciate you walking through this. Let's maybe start with the top. If you could scroll back up to the problem. So one thing, like as we're going through this, I think one thing we always look to recommend is unify, on a singular problem. And it's clear that you've done that, highlighting that college planning is overwhelming and the amount of support is shockingly low. I think one kind of push I'd have here is, as I was saying before, the college process being overwhelming and complex is something that most investors will have some buy-in on and have some understanding of. And so you have an opportunity to really cater to an investor's lived experience and therefore, jump one click deeper than the concept that college planning is overwhelming. Taking it to that next level and narrowing in on the actual problem that you're going to solve. So that, I think, can play to an investor's intelligence, play to people's experience, and immediately get somebody to relate to the problem, and then make it clear what you're actually solving. So if you're as you go through these beats here, the market's underserved. This is a really big problem. It's quite pervasive. There's tons of millions of kids in the US and globally that deal with this, and that there's the market failure around this being consulting being expensive. As you think kind of that one click deeper, what kind of comes to mind as like the singular problem that you're looking to solve? Is it providing access to consulting services, or providing access to better services for those that are underserved, providing cheaper services for helping people save on cost? As you kind of think that one level deeper, what kind of comes to mind?
Yeah, it's such a great question. And honestly, I think in our case, it can be a challenging one, and I'll kind of try to work through it because it's such a multifaceted problem, right? And I feel like our product does solve a lot of problems. Like, it solves an accessibility issue. I think at like my core and like what I've learned from our users is that we're really just trying to solve a problem of like reducing stress in our end users. So like high school seniors are extremely stressed about this process.
Mm-hmm.
And that stress comes from a few ways. It's inaccessibility to like good advising. It's stress from their parents, or it's stress from just feeling alone in the process. So yeah, maybe you can help me think that through a little bit, but I think it is, it's a really multifaceted problem, right?
Totally. Yeah, I think with that, I would look to maybe kind of structure the problem around, the lack of support on college admissions for the majority of Americans is causing a lot of stress. And that kind of then leads into the next slide, where, you're building clearly something that has the UX that's needed. Part of your edge is going to be creating a user experience that works for students and works for parents, because the competitors in the space are missing on UX. And so that's something that we could look to highlight here, because you're looking to solve for stress and the lack of the support that causes stress. I think what I like about this opportunity slide is we always like to narrow in on a problem, and then oftentimes that opportunity shows how there are people out there are other startups, there are incumbents, there are manual approaches that look to kind of solve this problem of the stress that lack of support creates, but they're missing the point for this and that reason. And I think you do a solid job, or at least have a lot of the thinking here on this opportunity slide, but you're almost like one step too far talking about your competitive advantages before we really know what you do yet. So one thing, as we're looking through this, is to, with that clear problem, maybe UX is your advantage, but thinking through, all right, there's consultants in the space that are a manual approach, but they're expensive. There are other tech products, but the UX is built for enterprise and built for colleges, not built for students, and therefore not solving the problem. And there's nothing that's really automating the process. There's nothing that's really guiding people, through along the process. And what that does is basically take the competitors, I guess on the slide before, is take the competitors and bucket them into categories and show how each category is missing the point, which can then better help inform a cleaner solution slide where you're showing, all right, consultants are expensive, we're offering something that's cheaper, we're solving the problem that way. Current software solutions are built for enterprises, we're creating a UX that works for parents and students. Some are not built for mobile. So basically I think there's a step kind of back. As I was saying with the problem, there's a step forward to take, going one step deeper. With the opportunity, I would take one step back and really think about the competitors, create kind of like a map of how the solutions are not solving the problem directly. And then that sets you up for a strong solution showing how you fill those gaps. Is just a little bit of a cleaner way to talk through the opportunity. Yeah, go ahead.
Yeah, just kind of thinking that through more of like really clearly connecting each competitor and mapping that to the different competitive advantages and why those market failures are leading to that problem that's so persistent, right? So
exactly.
Yeah, I think that makes sense.
And then that helps inform a solution slide that I think better encapsulates what you guys do. I think one of the biggest points of feedback we get from investors when we're putting together pitch decks or when we're talking through pitch decks is, I think probably the number one point of feedback is, I still don't know what's going on. Like, I still don't know what this is, what the solution is. And I think one trick that we do is, generally try to be reductive on copywriting firstly, so that we can be really clean and clear with, what is our solution? We're an AI advisor that's solving this problem. But, and another trick we do is kind of like use design to help kind of elevate the solution slide. So like maybe this is like a green slide. This is something clearly that people need to land on after the setup. But I think most importantly is, when you're talking about your problem here, you're already jumping into the revenue model, the referral systems for growth, the go-to-market, the distribution, and it's still a little bit lost on how your solution solves the problem that you had just set up. And so, with that, I think that we can go with a cleaner approach, talking about, the lack of support causing stress. All these solutions don't work because they're expensive. The UX is not built for students. And we're creating an AI platform. Now, LLMs are here. The tech is here to create an AI platform that is built for students. It's low cost, and therefore, and we're doing all these things. We're connecting students with planning. We're connecting. We have a chat bot. The what as well as the why. To make that setup more clear, and then we can dive into all the revenue model and distribution model, into the future. So that's kind of what I would think, to just kind of clean this up, make it super clear what you're solving, and super clear, how your solution solves the problem and fills the gaps in the current market. How does that sound?
No, that sounds great. I'm excited to make some of these changes. I think the solution slide is always a difficult slide, right? Because you want to include product screenshots, you want to try to find, also want to try to articulate how you're making money. But I think like the two bottom sections, the revenue model insights and our go-to market, could be pushed to the next slide. You're right. Yeah. And then we could, again, just double down on how we're cutting through the market and solving that core issue of none of the competitors are built for students, and students aren't supported. And then, because I do feel like this slide is like actually not showcasing a lot of the really awesome things that our product does. And yeah, that pains me that it's not there.
No, it's all good. I think a lot of the thinking is all there. I think what the last thing I'll say, and then I'll pass it to the team, is thinking through a one-liner that really encapsulates, the AI advisor and intuitive mobile platform helping students, reduce their stress. And then another, the next slide is the what and the why. So like, this is like the 3 core features, and this is why, that solves the market that the gaps in the market that the competitors are currently leaving open. So yeah, we'll pass to the team for any last feedback, but we definitely want to open this up to the next phase of the webinar.
Thank you, Alex and Henry, so much. Haley, we would love to hear from a VC's perspectives if you want to give some feedback.
Yeah, thanks so much, Kara, and thanks, Alex and Henry, for walking through it. I was stressed out reading the first few slides of your deck. It took me back to college, so thank you for that. As a VC going into a call, looking at a company like this, things I'd be thinking about are, why are you starting with this problem product customer segment? What differentiates you from other players in the market, and how are customers solving this today? I think the challenge when you start with such a big market slide is that big markets are often really competitive, which means expensive customer acquisition costs. And unless the solution is significantly better, which it seems like it is, that could lead to retention issues as customers explore alternatives, driving LTV down. So I'd be really curious about what the initial wedge might be, kind of working customer success backwards of either the parent or user groups that are most engaged. Is there a specific area, underserved population that is getting the most use out of the app that you could say is the initial wedge into the market? Thinking about my content marketing background, when we were advising our high growth startup clients initially, they wouldn't start with the short tail, highly competitive keywords that incumbents are dominating. They start with the long tail keywords that are underserved. One of the best consumer pitches I've ever seen, the founder said that he figured out what the biggest underserved population was with the lowest CAC, and that's how he decided on his initial go-to-market. So I think bringing some of that up, because the challenge you might run into in pitching to VCs is that this is a huge problem. There are a lot of people attacking it. I have a company in my angel portfolio that focuses on this. I'm not sure if it's in the same way or different, because to your and Alex's point, the solution wasn't 100% clear, but the more focused you can get, I think the better. And then really getting into the success you're able to provide for that specific parent and or user base.
Yeah, I think that's good advice. And, I have some thoughts on our beachhead market that, we could definitely incorporate into the deck to like make our differentiation and our go-to market strategy a lot clearer. It's good. That's a good insight.
Thank you so much, Haley. I just like +1 everything that you just said. Henry, thank you so much for joining us today. I'm sorry we don't have more time, but we really appreciate you spending your morning or afternoon with us, depending on where you are. And please do check out, Henry, the chat and the Q&A box. Some people have some questions for you, and probably would love to hear from you. Okay, team. We've got about 15 minutes left roughly. And I know Alex and Mark, I think you might have some stuff you want to talk about. We also have lots of great questions. So let's move on.
Yeah, so we have a quick just demo of a deck that kind of sets up slightly differently. We're also happy to move straight into questions. So we don't have a preference. We could punt it to the chat real quick, or if Haley or Alex have a preference, I'm okay with whatever. We got some people want the deck. All right. That's cool. So
They always want the deck.
yeah. Okay. So the reason I wanted to pull this one up, and there are other ways we'll start a pitch off. Sometimes we go straight into the business model. Sometimes we'll start with the team. Ultimately, you want to put your best foot forward. But in certain cases, and I think a lot of people on this call are probably in this position, you don't necessarily have the business model completely ironed out. You're still building the team. And that's why it makes sense to start with a problem and an opportunity. So this product is called Gleam. It's a hustle fund company that recently closed their seed round, or I guess their pre-seed, and they're bringing health tech plans to startups. So the issue here is that startups are paying too much money for healthcare. Many of the people on this call might know what this feels like, but you're paying $1,000 to $2,000 per employee. There's expensive options in the market and really just limited coverage too. So these options aren't even comprehensive always. But then there's this opportunity, and that opportunity is self-funded plans. So this can cut your cost by 50%. But the thing is that this is unavailable to small companies. To self-fund your own healthcare plan, you have to manage vendors, mitigate risks, there's labor costs involved, and it takes over 3 months of lead time. So unless you have a company with over 500 employees, you can't self-fund. So meet Gleam, enabling self-funding through software to end overpriced cookie-cutter healthcare plans. So there's a few things that are going on here, but today we spent a lot of time talking about highlighting the gaps in a market. And I want to kind of raise a point that oftentimes all you need to show is an issue with experience. So here we just wanted to highlight that there is this thing out there. It's just not open to the masses. There's a few reasons for that. And then here we are, super simply put, this kind of relates to Alex's conversation with Henry, but really just highlighting in a few words, here's what it is we do, here's how it is we're solving it. So slightly different approach. I think if you're in a crowded space, You will likely need to mention competitors early on. That's going to be a big question. But this person, they're actually kind of creating a new category. Many people don't know about self-funding. So let's spend some time showing why there's an issue in the user experience that we will then come in and later solve. So this is another type of flow, but if you can highlight a problematic experience, then there's an opportunity for you to come in and fix it up. So that's a quick demo. Alex, chime in with any thoughts. We have many more of these too. If anyone's interested, we can send over all the different ways that we will approach these first few slides.
No, I think that was great. I think we definitely wanted to get a B2B story in there. I think, one of the things that Elizabeth Yin taught us from the start is always look for ways, or always look for what kind of the feverish fringe is doing, or a unique kind of subset of the market is doing that's more efficient, more clearly kind of indicating that there is the early innings of a wave. And I think with this example, it's clear that there's something that bigger companies are able to do to save on costs. And there's no reason that smaller companies can't do it with if we can solve for the infrastructure, and clearly that's the early innings of a wave of clear consumer demand for something that's more efficient with a blocker that we can help solve. So I think that's a really strong opportunity, really strong kind of unlock or problem solve, and just generally a really clean up front. So love that setup. Haley, any thoughts there?
I want to dig into that actually, and Haley might have a perspective here as well. But I imagine that many of the founders that are tuning in today or watching the recording later might be in an industry that investors are not experts in, right? Like there's a lot of, especially at the pre-seed level, there's a lot of generalist investors who don't know what the options are for health insurance for companies of just about any size. So when thinking about a deck within an industry that is a little bit complicated, and explaining a solution that the investor needs an education on, how should the founder think about like addressing the problem, why this is a big problem, their solution, and the education behind why this is the right solution for this problem? How do we think about that?
I don't know that you can convince an investor of all of these things through a deck necessarily. You're just trying to convince them to take a call. So sharing enough information about the market to pique their interest and show that there's an opportunity and that there's green space available is usually enough to get people on a call. Whether or not this approach makes the most sense for the problem is more likely to come up in diligence if the person is not familiar. But often in digging into the solution, if you have one or two slides, you can kind of say like, what's the status quo versus your solution, and highlight why it's that much better, to make it clear that the approach makes sense. But again, I think during diligence, many, even pre-seed and seed investors, will have multiple calls with their prospective customers to say, okay, how are you solving this now? Does this make sense? But would love to hear from Mark and Alex about this too.
Yeah, I think there's one of the questions I think in the chat was like, how much data should we be providing in this pitch deck? And I think there's definitely a balance, but part of educating investors on like some niche that you're an expert in is showing some numbers, some big numbers, and making those numbers big. So I think that always helps to intuitively show kind of like that there is an opportunity here to dig in deeper in diligence or after the call. So a keen leveraging of data, not overwhelming data, but big strong numbers helps with that.
Alex, so when you talk about numbers, are you talking about like customer interviews that I've conducted as a founder? Or are you talking about more total addressable market, serviceable addressable market? And if the former, how many customer interviews do I need to be able to show that like this is representative of the problem?
Yeah, I think it can be all of the above. I think in general numbers resonate with people. So I think we don't usually like to slap a big TAM number on something from the jump, but showing some sort of arbitrage or opportunity or hundreds of customer interviews and leveraging those numbers, I think all help to just add credibility to the initial kind of setup of your story. So it can really be anything, but I think it's just the general concept that numbers do they do double duty, and they show versus tell in general. So yeah, I think that's a good question.
My quick take on that is I actually really liked what we saw in Sorry, which is pointing to a population number. When you place a TAM number, you're basically putting a stake in the ground as to a market opportunity. Just playing with, yeah, good to see you. Yeah. I think, that was really great. You're letting us know, hey, there's a group of people out here. And that's a really great way of kind of starting off. So I don't think anyone needs to see that you're solving a $5 trillion market. And I think when Alex says big numbers, he literally also means just making them big so you can read them. And it's really simple. The one other thing I wanted to just quickly mention is I think this is a great segue into a question that we've been wanting to answer, which is if you're an early startup, how do you deal with traction? So this comes a little bit later in the deck. Some people were discussing, does this come at the start? And this is something we are problem solving constantly with the people we work with. So if you have not made money, you want to still show what you have to show for yourself to date. That could be numbers of interviews completed. That could be total wait list. That could be a newsletter. That could be any early demo usage statistics. So let's say you do have a beta. How much time are people spending? I think it's better to actually say the small numbers around what you've actually accomplished versus kind of crazy things. There are 100 million people that will pay for this one day. So I think if anything, this might be a good note to people that you should be running those interviews. You should be trying to get all the little kind of brownie points you have, because that oftentimes is what ends up making a compelling traction slide before you have actual big revenue traction.
Yeah, I would just jump in and just confirm, like, I think traction is results, and whether those results are in revenue or in the amount of people that you've spoken to really understand the problem, it's something that's happened. And I think founders oftentimes are, with that in lieu of traction, look to kind of create revenue projections and break even point kind of graphics and stuff like that. That's potential future facing. I think that can hurt credibility. I think it's generally good to anchor to what you've accomplished, however small that is, however early you are, and then talk through how you're going to look to grow, but not put any stakes in the ground that we're totally going to hit 10 million in sales in 2 years, and that let what you've done speak for itself.
Quoting
Haley,
Elizabeth,
Haley, I want to hear your thoughts, because I think we probably only nailed a couple of the ones, and you probably know many more.
No, I think you're spot on. Elizabeth, I got to work with Elizabeth really closely when I joined the fund, and one of the things she kept beating the drum about was that traction doesn't matter. What matters is, and Kara does a great job, Tam does a great job of talking about this in the founder playbook on a weekly basis, is knowing your customer really well and being problem focused versus solution focused. So be obsessed with your customer and the problem you're solving for your customer or problems, but not anchored in a specific solution, because we know it's going to change. It changes for a third of the startups that we invest in at this stage. So I think you covered it. Only other thing for like enterprise scale companies, LOIs can be another way to show early signs of traction.
Yeah. And customer and customer quotes we like.
Yes, testimonials are amazing.
Yeah.
Okay, I want to move on. A number of people I think here are building marketplaces. So they've got the demand, they've got a deal supply. Both of their audiences are dealing with a problem. They're probably a different problem. How do you recommend that the founders who are building marketplaces think about drilling in a single core problem when they're building for two audiences? Should they pick one or the other? Is there a rule for like always supply versus always demand? Go.
Let me take a quick stab, and then I really want to make sure we all touch this one, as I love answering this question. I think it's an unfortunate fact of pitch deck life that you can only have one problem. So whether you like it or not, you really can't have more than one problem that you're solving. So the first rule of thumb is orient the problem around who has money at stake. That's the simplest rule of thumb. Let's say you're solving two sides of the marketplace, but it's a big, hairy issue on one and a nice to have on the other. Focus on the user that has money at stake, that you can make money for or save money for. The other route here is, let's say there's not a clear answer to that. I would then look to use the problem as a context setting moment. So this is like the seedling that multiple sides can grow out of, and keep it at that level. So, you could just make a statement around dog walking, or make a statement around driving places. And then you can then focus on it's an issue for riders, it's an issue, or here's how we solve it for riders, here's how we solve it for drivers. So that's another route, which is, you don't want to lose acuity. You don't want to say something vague, but it does need to be one problem. But yeah, I mean, I think Haley probably has a ton of pattern recognition here, having seen the number of decks that she has. And then on our side, we are just constantly telling people, you can only have one, and ideally, it should be a simple problem, because that's often one that's worth solving.
If you're building in marketplaces, highly recommend. I'll drop a link to an article that Elizabeth Yin wrote about marketplaces, which focuses on building the supply side and specifically aggregating net new supply. So it's not something that's easy to get elsewhere, or else you're going to run into a disintermediation problem. I'd also recommend looking at Bill Gurley's writing, because he's done so much marketplace investing at Benchmark, famously eBay, Uber, lots of fun there. And then the cold start problem also. But I would say focusing on supply first, and showing why you have an unfair advantage in acquiring that supply, before focusing on the demand side, because it is a phased thing. Marketplaces are notoriously difficult to build. So having a very focused approach, just like we talked about when talking about college admissions, like what's the thing you're going to start with to stay alive for long enough to be able to get to the next phase. It does require some finesse and strategy. So you maybe start with that one part of the problem, and then as you go through the deck, you then connect to demand, but don't put too much on a single slide, to keep it simple and just get that credibility underfoot.
Yeah.
I want to double click on something you just said. Sorry, Alex, really quick. In general, do the three of you think that it's better to have more slides with less text across the board than trying to keep the deck really short and pack the text in?
Do not like a lot of
Good
text
question.
or a lot of slides. Is that enough?
Okay, so neither.
Less
You think,
slides.
Alex?
I mean, that's the answer. I think it's fewer slides and definitely less text. We always say, like, we want to optimize for the audience that skims the deck. And so, thinking through, all right, what's the high level structure here to efficiently get the point across in as few slides as possible, knowing that people are spending, a minute on the deck is just optimal for yielding the outcome that you want. So keeping things simple is always better. But yeah.
I'm going to quote, I guess his name is Vinod Khosla, the founder of Khosla Ventures. He had a brilliant line in a presentation he gave on pitch decks, where he said that the issue with putting too much information on a slide is that visual complexity, which isn't necessarily a bad thing, can cause someone to think that what's going on is complicated. So you could put too much information on the slide. There's nothing inherently wrong with that, but it is a problem if someone is then thinking, this is messy, this business is messy, this industry is messy, I'm going to stay away. So because of that, you're forced to keep it simple. And I use that line a lot. Shout out if he ever sees this.
Amazing. Okay, wow, just down to the wire. Unfortunately, we have to wrap this up. There were so many great questions we didn't get to. We'll try to cover those in the founder playbook. Mark, Alex, Haley, thank you so much for being here and giving your time today. We're so grateful.
Thank you all. Thanks, Mark and Alex and Kara. You're the best.
Thanks, everyone.
Mark, Alex, how can people get in touch with you if they dig deeper into your amazing feedback for their decks?
Deckdoctors.xyz. Our email is always open. Come say hi. We'll be looking forward to it.
Amazing. Thank you. And Haley, if somebody wants to apply for funding from Hustle Fund, where can they find us?
Hustlefund.vc. Would love to hear from you.
Amazing. Thank you all so much. We'll send out the recording in the next 24 hours, and have a great rest of your day. Thank you again, Farhan and Henry, for being part of this.
Thanks, everyone.